let's take stock of a company that the management of which we're going to be in conversation with, and that is TVS Supply Chains. We're in conversation with Ravi Viswanathan. He's the managing director, as well as Raviprakash, of global CFO of TVS Supply Chains, who's joining us. Gentlemen, good morning and thank you so much for joining in. Mr. Viswanathan, I start with you. Your assessment of the quarter gone by, how have things shaped up, and with the way things stand at the moment, what can we expect as we move into the next couple of quarters, especially keeping in mind perhaps some amount of disruption that the general elections may have caused in the moment?
Hi, good afternoon, Agam, and thank you. So let me just say in FY24, we had a stellar performance from a growth perspective. When we look at it from an overall perspective, we have two segments that we operate in: the Integrated Supply Chain Solutions and the Network Solutions segment. The Integrated Supply Chain Solutions had a fantastic year, and that is something which we had spoken about through the year. We had very large deals, very significant wins, and the key for us is the ability for us to execute in terms of our business development, grow our customer base, and also deep mine our existing customers. We started 2 years ago when we spoke about the fact that we had about 61 Fortune 500 customers. That increased to 72 in FY23. And this year in FY24, we have 78 Fortune 500 customers. So the quality of the engagements and the quality of customers that we have acquired, which is really setting us very well for the FY25 and beyond. So great performance on the ISCS side, double-digit revenue growth, and significant margin expansion. On the network solution side, globally, the freight business is something which the trade volumes are suppressed. The freight container rates have all come to way below when it was the COVID time. So it's a period of stabilization. And this year, really, what we focused was to ensure that we focus on operating margins. And we continue to watch this space, because as trade volumes go up, I think we are well positioned to capture that opportunity. FY25, I will say that we are confident of, again, double-digit growth in the Integrated Supply Chain Solutions segment. But I will probably wait for a couple of quarters before seeing the trend on the global freight business especially.
Right. Mr. Viswanathan, based on your geographic divide at the moment, how much of your revenues come from within the nation and how much of it is from outside?
So roughly about 30% of our business comes from India. That used to be 25 a few years ago, and 70% comes from the rest of the world. We believe in the next 2 to 3 years that should shift closer to a 35-65 mix as we see increased economic activity in India. Last year was, I would say, a combination of the India business itself. If you look at TVS and our peers, we've had sluggish growth. I would say post-elections, we expect that to significantly change, and we expect the India business to also hopefully get to double-digit growth.
Right. Mr. Raviprakash, if you can come in on the pricing environment currently, both within India as well as outside. If you could also shed light on the kind of impact that it has had on your EBITDA margins, your operating margins for the year gone by, and whether or not you are planning to maintain these margins, or can we expect an improvement going in based on what the kind of business traction that we can expect?
We absolutely expect to improve our margins. In fact, our guidance always has been that every year we seek to improve our margins, both EBITDA and at the operating income level, by between 50 to 100 basis points. And that target stays, and the company is working towards that. And that kind of leads to the question you had on pricing. Look, we are in the supply chain business, and we are in the business of delivering savings for our customers. So the way we look at pricing is, we have to be intelligent about the way we price our solutions. It's probably not a straight price game, but more in terms of what value you bring to the table. And the way we manage our profitability is, we try and at a contract level, provide incremental value every time we get into a new contract, and manage our operating margins on a very, very tight basis. And that's the driver of our future margins. So at a contract level, you kind of maintain your margins in a very narrow band, but then leverage the overall overhead of the company to keep growing it as revenue keeps growing.
Mr. Raviprakash, a quick word on your balance sheet as well. While we have seen your cash and equivalents come off by quite an extent, we've also seen a substantial reduction in your gross debt. The question at the moment is, are you comfortable with these debt levels? With the kind of plans that you have for FY25, do you think that there could potentially be an increase in debt levels? Also, notwithstanding the changes in the interest rate regime, what's the way forward here?
So from a balance sheet perspective, we are actually quite comfortable where we are right now. We have completely paid down our long-term debt, and the debt that stays on the balance sheet today is only working capital debt. So that's actually going to fund the customer services that we are providing. Going forward, our objective would be to have this debt move in a very narrow band. We are actually trying to fund any incremental revenue through internal accruals and keep any incremental debt to the minimum. And then therefore take most of the interest savings. Our interest cost has dropped from about 41 crores a quarter to 16.6 in this quarter. We would like to keep as much of that benefit into the P&L in the coming quarters. All right.
Coming back to you, Mr. Viswanathan, a word on your volumes in general over the two segments. I'm looking at a roughly, on an average, about double-digit volume growth. But is that something that you would expect to maintain in the upcoming financial year as well? And based on that, could you give us some sort of an idea as to how your top line could pan out in terms of growth for the upcoming financial year?
So I think double-digit volume growth is absolutely on for the coming year. It's I say this on the back of some very large engagements that we have won. I think we announced a couple of deals over the last 4 or 5 quarters. We signed a very large deal with Centrica in the UK, and at that time I even said that this is going to be a forerunner for similar contract, because until then we were probably not invited to the table for these 2,000, 3,000 crore kind of opportunities. Today, if I look at the pipeline and where we are on that pipeline, we are extremely confident that we will convert 1 or 2 such pipeline opportunities in the current fiscal, that is FY25, and that gives us the confidence that the volume will continue to grow. On the freight side, I will hold my prediction. I continue to look very closely at the situation that is out there in the Red Sea and beyond. And hopefully we'll be in a better position to talk about volumes in the freight business. Right now, I would say the volumes are fairly stable in the freight business, and we continue to keep a very close eye on the operational efficiencies while the volumes hopefully gets an uplift. So integrated supply chain solutions will drive the volume expansion, will drive a lot of the revenue growth and the margin, of course. And the freight business, we will keep a closer business watch. But overall, we are confident of a double-digit growth in the next fiscal year.
All right, gentlemen, we leave it at that. Thank you so much for joining us and taking the time out to speaking to you here us on NDTV Profit. We look forward for the next conversation, perhaps a quarter down the line. But until then, we wish you the best for the future. Of course, that's the management of TVS Supply Chain Solutions telling us about how quarter has gone by and what in fact we can expect going forward into the new financial year. A lot of details emerging with respect to growth, volumes, as well even the balance sheet. But on that note, we slip into a short break.